What's going on, everybody? Stas here. So the stock market got completely decimated today. Yet again, S&P 500 down 95 points, down 2.8%. The Dow Jones down over 600 points, down 2.2%. And the NASDAQ, the tech-heavy index here, down over 550 points, down about 4.8%. Very ugly day out there today, guys. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over my thoughts around how much lower we could be headed here in the market. Are we going to head lower here in the market? And I also want to share with you guys what I've been doing here as of late, my trades, and a bunch of stocks that I'm looking to buy that I'm not already in that I think are pretty interesting in the stock market right now. So a bunch to go over. If you guys find value, hit that like button for me. Let's try to get 400 likes. I challenge you guys. We failed the past couple of times on this 400 like challenge. So let's try to get 400 likes, subscribe to the channel, and also join our free Strive Smart Discord and our Facebook group link down below. You can also claim one free stock from Webull valued up to $1,600 with a deposit of $100 into the account, and that is also linked down below. And by the way, that is an affiliate link, and if you do use that, I do get one free stock as well. So let's get into it, guys. The S&P again, all across the board, we got crushed. And just when you thought on Friday, if you guys remember on Friday, the S&P rallied from 3350 to about 3450, so a 100-point rally there. Just when you thought, hey, we might be seeing a push here, we could be rebounding, it proved to be a dead cat bounce. That's all it was. That's all this 100-point rally was on Friday. And why is that? Well, because, guys, we ended up failing to break out of this downtrend that you guys see here on the 5-day, 5-minute, and that is indicated by this red trend line and this 180 SMA. So pretty much this morning when we gapped down and we hit a lower low, we broke the lows from Friday. That pretty much continued the downtrend. The second we gapped down and we broke 3350, quite honestly, to be exact, we got down to 3340. Once we did that, the bears gained control again, right? And we ended up failing to break out of around 3390, which is where we held on Friday. We kind of double topped there today, guys, on the S&P around 3380, actually, not 3390. So we failed taking out one of the lows from Friday. We got double top resistance, right? We ended up dumping into the close, which was also very bearish. So at this point, it's very obvious the bears are still in charge on the S&P when it comes down to these previous 3 days of trading. And sure, if we pull up the 4-hour chart, the 6-month chart, yeah, the bulls are still in charge in a macro scale, judging that, considering that we haven't really fallen that much and the uptrend overall is still intact. So yeah, bulls are in charge on the 4-hour chart, but if we dig a bit deeper like we just saw on the 5-day, 5-minute, it tells a bit of a different story. So where could the S&P 500 be going here? On the 20-day 1-hour chart, you guys can see we ended up closing at a pretty critical level of support at around 3320 to about 3330. That is very, very critical here. And for me, guys, if we break 3320, I think we're going to see another leg down. I think we're going to see a pretty big leg down. Maybe not that big, but I think the S&P has a shot of getting down to, let's say, 3280. 3280, 3270 is back where we topped off at towards the end of July here. We actually saw a double top end of July at about 3280 before obviously running up to all-time highs. So I think the next big level of support is going to be that old resistance. So if we end up selling off tomorrow under 3320, 3330, if we gap down, that is where we might see support right around 3280. And don't be surprised, guys, if tomorrow we saw some sort of a rebound day as well. Maybe not all day. We might have a red day tomorrow as well, but in that red day that we might have tomorrow, we could maybe have a bounce back, kind of similar to what we saw on Friday. We saw a big sell-off on Friday, followed by a bounce back, right? And today we saw a big sell-off, so who's to say the S&P doesn't rally from, let's say, 3320? Again, that's a big support. And maybe we see another little relief rally back up to 3380, test that resistance again, 180 SMA on the 5-day 5-minute, and then from there we can see, okay, are we going to get rejected on this downtrend again, or do we break out and the bulls take over? So watch out for 3320. That's the gist of it, guys. If we pull down below it, we could be headed much lower, but we could also see a relief rally. That would not surprise me tomorrow as well, considering we had a pretty big red day today. And on the Dow Jones here, again, down 630, we broke the lows from Friday, right? We broke 27,700. That was very bearish. We actually hit a low of about 27,400, but we actually held that all across the day, so that's one decent sign for the bulls. But either way, I mean, it's not a good sign at the end of the day, because 5-day 5-minute still shows the Dow is still in a downtrend, just like the S&P 500. So I'm thinking if we break that 27,500 level that we closed at, and we go down further, we might be gapping down. Let's take a look here on the 90-day chart. Where could we be going? Maybe I'd say on the Dow Jones, probably $27,000 flat. Or points flat. You guys can see it here on the 4-hour. That would put us right around that 180 SMA on this 4-hour chart. I'd say that's a very healthy pull down spot on the Dow Jones. And mind you guys, again, kind of correlating with that relief rally that I said on the S&P, look at the RSI. The RSI is pretty oversold on both of these indexes here, so we might see that relief rally before selling off even further. That's kind of what I'm thinking here. Very similar to what happened on Friday. But either way, guys, whatever happens, one thing to keep an eye on, or not to keep an eye on, but to keep in the back of your head, is to never panic, right? Don't panic. Just because the market's selling off, it's not a time to sell everything, freak out, panic, because you guys have to realize the markets have been running up so long. The Dow from 18,000 up to almost 30,000, S&P, from 2,200 up to 3,500, NASDAQ from 6,000 to 12,000. These moves are unbelievable, so we need to see some selling. It's healthy. Do not freak out. If anything, view this as an opportunity, but another thing to keep an eye out on and understand is we're heading into pretty volatile times, and the VIX backs that up. We can see the VIX today, the fear index was up a lot even earlier in the day. It ended up closing up only 2%, but earlier in the day, the VIX was at about 35. It closed at 31. That has a lot to do with, obviously, the overall sell-off here. Here in the United States, we have an election coming up, which is another big thing here that could shake up the markets. And again, you shouldn't panic because of that, but it's one thing worth understanding and realizing it could shift the market. So have extra cash, have that liquidity ready to rock and roll in case of the volatility. And again, the proof's in the pudding, guys. We are getting volatile. That's literally what the VIX is showing us. As the VIX goes higher, what does that show us? Well, again, volatility, and there is a little bit more fear in the markets. There's a little bit more tension, uneasiness. That's kind of how I view the VIX here. And when it comes down to the NASDAQ, take a look at the NASDAQ, guys. We're approaching a pretty big level of support, right around 11,000 points. We talked about this, I believe, last week. You guys can see that is where the NASDAQ actually held, not held, but it was a big resistance for the NASDAQ all across from the middle of July, pretty much to the beginning of August, right around 11,000, and then from 11,000 we rallied all the way up to mid 12,000s here, and obviously now we're pulling back down to 11,000. So this is a critical spot. If 11,000 on the NASDAQ breaks, the 180 SMA here on the NASDAQ breaks, we could be headed much lower. Maybe not much lower, but I'd say 10,700 could be a target. You guys can see it if I extend this line to the right a bit. That could be a target we go to, maybe down to, let's say, 10,800, maybe 10,500. That's another big target. So I think the NASDAQ, if 11,000 breaks, we could see another 500-point downside. Maybe not tomorrow, maybe not all in one day, but across the next couple of days, that is where we could be headed. And we got some news, I believe last week this broke out. Either way, I mean, it's very, very likely causing a sell-off here in the market. and it could be behind this little blow up in tech. We got SoftBank bought about $4 billion worth of options tied to underlying shares it had earlier purchased in tech firms like Amazon, Microsoft, Netflix, according to Wall Street Journal. And this actually gave them exposure of about $50 billion, because we all know options is a way to leverage your money. So you can put, let's say, in this case, $4 billion, and you have exposure to make a lot on that $4 billion, as opposed to just straight up buying shares, right? That's what options are for. And of course, you can do this on a smaller scale. You know, if you have $100 to play with, that could give you a 10x return with options, which that's much harder to do with individual stocks. So they have a lot of exposure to these big tech stocks, and the Financial Times wrote that the company had been buying options in tech stocks throughout the past month in large amounts, which helped to fuel the largest ever trading volumes in contracts linked to individual companies, the Financial Times reported. And the idea that options buyers could drive extreme rallies in technology stocks and push benchmarks indexes to record highs has drawn skepticism in the past. But as call volumes have exploded in stocks such as Apple, Amazon, Tesla, analysts are beginning to embrace the theory. They point out that traders could have outsized influence by concentrating their bets on a narrow set of high-volume names, while other trading activity is reduced. And this is pretty interesting stuff, guys. You know, they had a lot of exposure to options, and as these big funds, let's say even SoftBank, right? They could be dumping these options here, and people are left holding the bag. It's kind of like a game of musical chairs. That's an interesting quote that I was reading online, and that applies to this situation, because they're buying up all these contracts. They're probably buying up all of these shares, and other people and other traders, investors are seeing the volumes on these call options up a lot. They're jumping in, so it's like a whole train heading into these tech stocks, and now they're probably dumping out. They're taking profits. They're jumping off the boat, and that kind of goes to the musical chairs. Now, a lot of these retail investors are left holding the bag on some of these contracts, some of these shares that are at higher prices, while SoftBank out here is, selling out. Hypothetically, we don't know exactly, from at least what I've been reading, we don't know exactly what they've been doing. This is all, I believe, reportedly, but either way, this could be the whale. It's kind of, I was reading, it's kind of viewed as the NASDAQ whale, SoftBank, right? Because they have so much money flooding into these tech stocks, and this could be the little prick that's popping the tech stocks in the short term, all of this money flooding out. And I'd love to know what you guys have to think down below. Ultimately, do I think this will lead to a huge crash in the NASDAQ like we saw back in February, March? No, but I do think that we are seeing a bit of a blow off the top, down 5% today. And if this leads to a 15-20% little correction in the NASDAQ, as people are selling out SoftBank, other institutions, whatever, hey, I'm all for it. I think that is healthy. I think that is very possible. And again, I'd love to know down below what you guys have to think about all of this craziness. And when it comes down to my trading, again, we go over every day here what I've been personally doing. I actually traded Workhorse today, and I didn't update you guys on Friday because if you recall, on Friday, I ended up filming a video before the market closed, so I actually made a move after I filmed that video. Excuse me, guys. And it was in Workhorse. I actually got in last week, if you guys recall, at 17. Let me double check this these notes here. At 1730 and at 1840. So I had a nice position at about 1770, 1775. And if you guys recall, Workhorse was able to rally pretty aggressively on Friday, and I actually sold out on Friday right before the close. I believe it was like 1950, maybe 1970, but I could be wrong. It was around 1950 to 1970, right around there. So I locked in that profit. It was a nice profit. I think it was close to 10%, maybe even over. About 8-9% on that position there on Workhorse. And I actually day traded it today. I mean, Workhorse has been treating me very well, guys. Knock on wood. Excuse me again. Geez, my throat. But Yeah, Workhorse has been treating me very well, guys. I mean, today I got in at $20, and let me check my notes here. I think 13 cents. 15 cents, $20.15, and I sold out at 23.11. I mean, talk about timing. I mean, listen, guys, I was looking, and first and foremost, I locked in on Friday just because I wanted to go more cash into the long-term weekend, and we were trading under the $20 resistance, so I didn't really want to force anything. I was already up on the position, so I locked in on Friday, and I told myself if we break $20, show any momentum above $20 on Monday, or Tuesday in this case, I'm going to get in. And what do you know, guys? We showed exactly that. This morning, we rallied aggressively from $19 up to $21.30. So we got that aggressive pop above 20. We moved $1.30 above 20. That showed momentum above that resistance. And then on the pull down, this is exactly where I got in, guys. No joke. This is exactly where I got in. We dipped to about 1978. We started rallying back up, and I bought at $20.15. No joke. And then I ended up riding it all the way up to $23.11, and I got out. And that move, I mean, it's crazy. These moves that Workhorse is making, I mean, they're not normal. Don't get used to these types of moves, guys. I mean, maybe with a stock like Workhorse, you guys know it moves like this, but for other stocks out there, don't get used to moves like this. Let's just put it that way. But I made 12% on this trade today, which is unbelievable. 12% is good for a year of returns in the market, let alone one trade. And that goes to show, again, how crazy a stock like Workhorse moves. So in terms of fresh new trading, that's the main move I made today. Locked in those profits, and I also bought a little bit more Tesla. I nibbled a little bit more of Tesla today at $355 per share. And yes, I'm well aware, guys, Tesla's down 21% today, down $90. It's down even more after hours. It closed the day on a pretty big downswing. I mean, all day it was downswinging. Excuse me, guys, downtrending, and again, it's down about $8 after hours, and I'm not freaking out. I'm not panicking. This is a company that I think will bounce back. I think it's getting to oversold territory at this point. I know it's crazy, but I think it is getting slowly to oversold territory. It's bound to see maybe some sort of a comeback. Maybe we don't rally straight back up to the highs of 540. It could happen. Nobody knows what's going to happen. But like I said earlier with the markets in general about a relief rally, right? We might see a relief rally tomorrow. We could be seeing that in Tesla and some of these other tech stocks at that, right? We could see a relief rally in Tesla where we go back up to $400, maybe $380. But the tricky thing there is don't get caught in a trap. That could be a trap for those people that are maybe looking to get in more short term. Maybe they're, looking to hop in a swing trade or a quick little day trade. Be very careful because you could get trapped and this thing could go lower. And that's a situation that a lot of people don't want to be in. And you might be asking yourself, well, Stas, aren't you in Tesla in a similar situation? Well, yeah, I bought in at 480. I'm down a lot on that stake. I bought in at 418, down a decent amount, and I also bought at 350. So I'm down on these positions, but the difference is here that I have a longer time horizon with this position. I'm not looking to sell out of it next week, the week after. I'm cool with sitting on my shares, and I have a lot of cash in my portfolio that is cash. It's not invested in anything. So I could add more to it if it goes down. So I'm in a different position. I'm sure many of you guys are in that same position where you do have a lot of cash as well. And you understand that having that cash gives you the opportunity. So I feel comfortable here just holding Tesla, averaging down. I think my cost at this point is maybe a little under 390, 385, I think somewhere like that. So I'm not freaking out by any means. I'm just being patient, right? And I'm also still in NVIDIA with a very small position. I'm down a pretty decent amount on this one. I'm in at $519 per share. I'm also in Apple, guys. in at about 125. I'm down on this one as well. Apple got crushed today, down about 7%. But like I said with Tesla, I'm not freaking out with Apple or Nvidia either. You know, these are all companies, stocks that are still trading right around their 180 moving averages here on the 4-hour chart. And as long as they do, you know, that uptrend is still intact. And we have to just, again, be patient and just wait it out. And I'm also here in GDX and GLD still. These are two gold ETFs, and there's a reason for that. There is a reason for that because gold was up 4 points today, and silver, which I'm not in any silver positions, but silver was up 0.5%. So you guys see the precious metals, they hold up as the markets in general, the stock market, NASDAQ, S&P, Dow, as they get crushed, which is why I love having exposure to these precious metals. You know, I have GDX, I have GLD, and on top of that, I have physical gold in my possession just to have some exposure there as well. Not a crazy amount, but I like having, you know, a couple percentage points of my overall portfolio in a little bit of gold. So let me know down below, guys, what are you doing? I'd love to know. Drop a comment. And now let's talk about some other stocks. We had some crazy movers today. Nikola was one of them. Nikola, guys, holy crap. Nikola was up, I think, 50% at some point. It didn't close up 50%. It closed up more like 41%, but still, you know, 40%, 50%. Both of them very, very strong. And this is on news of very good news with GM. Very good news here. The Phoenix-based Nikola said in a filing with the SEC that it entered into a subscription agreement last Thursday in which it will issue and sell 47.7 million shares of common stock to GM, valued at $2 billion. The battery and hydrogen electric vehicles maker disclosed a large equity investment that could be potentially game-changing here with GM to build the Nikola Badger pickup truck. And let me tell you guys, this pickup EV market is going to be huge. We know that Ford has, I think the Ford 150, F-150 is, correct me if I'm wrong, guys, I think it's the most selling vehicle out there. Maybe it's the most selling truck. Either way, that's a huge market, and we're going to see the Cybertruck coming in. We're going to see, of course, Nikola's vehicle here coming in, and of course, we have Lordstown Motors, the Endurance, which Workhorse has a 10% stake in, and a bunch of others that I'm missing out here. So a lot of these trucks are coming into the game, and as a part of the agreement, GM will provide Nikola access to its parts and components, including its Ultium, am I even saying that right? Ultium battery technology, and GM will engineer, sanction, validate, and manufacture the battery, electric, and fuel cell versions of Nikola's Nikola Badger truck. And Nikola will remain responsible for the sales and marketing of the Badger, which is expected to make its public debut at Nikola World 2020 in Arizona, scheduled for December 3rd to December 5th. Badger production is expected to start in late 2022 at a location to be announced later. And we all know Nikola got a lot of slack for their reservations not being paid, and now, well, you can do reservations for $100. Very similar to what Tesla does. You put $100 down and you can reserve a vehicle. So Nikola, guys, I'm not crazy about this company compared to, let's say, a Tesla, a Neo, a Workhorse, because I think it's still in a not a concept phase, but it's a bit further back in the game, at least in my opinion, for my research. But I think there's potential. I think there could be a lot of upside here. We saw it go from about $10 to $97. Then we got a lot of share dilution. It went down to about $27 from $97. And now this could very well be the start of the next rally. I mean, take a look. On the 4-hour chart, this move today of about 40%. Yeah, it's overbought. A lot of volume came in. It pushed the stock up maybe a little bit too quickly, but it did move us out of the moving averages, both the 180 and the 50 SMA here, which overall is very bullish. So I'm thinking here on Nikola, I'm not really ready to add a long-term position in yet. For me, at least, I have to do more research into it. And quite honestly, I have so much exposure to electric vehicle stocks from Workhorse, NIO, and Tesla. I don't even want to add more to my portfolio, but as a trade, I'd love to trade it. If we pull down mid-40s, $40 even, I could end up hopping in on the dip there, maybe making some money. And the other one here that we called out yesterday, it's almost like they're watching my videos, guys. It's almost like they're watching my videos. We called out, and I know they're not. I'm obviously joking, guys, but Virgin Galactic. We called this one out yesterday and the previous couple of videos, and went up 9.3% today, up $1.50. And this is because UBS initiated a buy rating and a $25 price target. Oh, who's been talking about that? Me. I've been talking about that. Like I said, are they watching my videos, guys? UBS, are you watching my videos? Well, we talked about this, guys. We talked about how Workhorse has been, or not Workhorse, Virgin Galactic here has been getting beaten up too much recently. It's gone from $27, $28, big resistance, right? We hit that resistance, and we've lost about 50% of the value, from $28 to about $14. We overall held this support, it seems like, at about $14, and I've been talking to you guys about how 14, 15 has been a pretty big buy zone as of late. So this is looking pretty spot on what UBS is saying, and I'm loving it. I'm looking to add more to my Virgin Galactic long-term position here. And yeah, I think it's still, despite it being up 9% today, I think it's still at a point where, yeah, it might still be going higher. I think there's still a lot of potential here. I don't think by any means that the rally is over quite yet. And on top of that, yeah, we could go lower. It's still in a funky spot. So just because UBS has a buy rating, $25 price target, just because I'm talking about it, I love the stock, doesn't mean that it's going to go straight up in a line, right? Always understand that and always do your own due diligence. So overall, Virgin Galactic, I am loving it. And a couple of other tech stocks here that I like. Google. Google is one that I think, out of all the tech stocks out there, and I'd love to know your thoughts down below, I think Google is arguably the cheapest one. And don't think that I'm saying cheap as in it's dirt cheap. No, it's still pretty expensive, right? It's still pretty expensive, but considering all the other stocks are very expensive, tech stocks, this is probably the least expensive of the bunch. We went over it in one of my previous videos. We talked about how Google has, what's the PE ratio? I think like a 35, forward PE of around a 31. So that's not too expensive considering the growth is still pretty solid. They're growing at about 15% on average per year, and that could go up, it could go down, it could vary, but overall 15% growth, 35 PE, that's not that bad. It's not extremely cheap, but out of the tech stocks, I like it. And overall, I mean, I've talked to you guys about this. If Google were somehow to get under $1,200 and especially $1,000, I'd be loading the boat as a long-term position. But as long as it holds this 180 SMA here on the 4-hour chart, as it is as of right now, despite it being down 4% today, if it holds this trend, it could be a nice little swing trade as well, depending on how the overall markets do. Yeah, if the overall markets take a big hit, if they drop another 10%, obviously Google's going to fall further, but then I might be able to pick it up on a long-term basis. So either way, I feel like I'm winning, because if we bounce back here, I can get a short-term little swing trade, make some money there, or if we go lower, it'll bring the valuation down. Yeah, I might not swing trade it, but I might be able to add some long-term shares if Google, again, is able to get down to 1,400, 1,300, and even under 1,300, guys, I'd be buying Google for the long term. And another one here is Facebook. Facebook was back a couple months ago. If you guys remember, it was the most undervalued tech stock by far. I mean, the PE was pretty solid. It wasn't running up as much as the other stocks compared to the revenue, the sales, and so forth. I mean, back then, Amazon was crazy, Netflix was crazy, but now Facebook got a bit bit frothy when it ran from 200 to about 307 in the past couple of months, and now we're finally seeing a correction from 307 to 267, and this is opening up kind of like Google, a very nice swing trade in my opinion. And am I adding any long-term position money here? Probably not. If it were to drop under, let's say 220, 230, maybe under 200, I'd add more long-term money into Facebook, but anything above this main moving average I think is a swing trade, so I'm watching it very, very closely, and I understand, like I say all the time, the markets could go lower, which is why cash is always a smart thing to have, especially in times like these. So watch Google, watch Facebook. Also watching Starbucks here, SBUX. We hit about $90, big resistance. We're selling off now, holding 85. And overall, it seems like Starbucks has been doing well despite tech stocks getting crushed. Obviously, Starbucks is not a tech stock. It is a little tech-oriented with the app, that the service and so forth. But I'd put Starbucks more, obviously, as a restaurant stock. And this could be one that people flood money into as they get out of the tech stocks. It's kind of like a rotation here. We might see some money going into Starbucks. So I'm thinking as long as 84, 85 holds here on the 4-hour, this 50 SMA, and we start to push back up, maybe into 86, I think Starbucks could be a move, maybe back up to $90. And we saw Beyond Meat today, BYND, up about 7% on the day. Let me show you guys here. Up 7% on news that they're constructing a new manufacturing facility near Shanghai over there in China. So that's a big, big market. Obviously, China is over 1 billion people. I don't know how many people are in Shanghai, but it's a lot of freaking people, guys. Let's just put it that way. So that's a good sign for Beyond Meat. Obviously, the shareholders love it. Again, the stock's up 7% today, and this is good stuff. I mean, if Beyond Meat breaks 140, which it's still struggling at, and I'm not looking to jump into it until it does, but if it breaks 140, I think we're going straight to mid-140s and maybe back up to the 150s, guys. But we have to break 140, as this has been a big resistance stemming back from the middle of May. And the last one here, another food-oriented stock, very similar to Starbucks, could be a place where money rotates into, is McDonald's, MCD. And it was actually green today, guys, up almost 1%. Up about $2. And notice McDonald's is actually nearing, I don't know if that's the all-time high, but it's the high here on the 4-hour chart at about 218. Let me double check. Actually, no, it's not the all-time high. 220 is the all-time high. So McDonald's is getting in a pretty interesting spot, approaching a resistance. This could be where we bounce out. We could break out of this resistance at 218, 220, and that could even give us more upside. So I'm thinking McDonald's could be showing some strength, especially in this market that we're in. I mean, again, it was up 1% today, and I think that could continue. So watch out for this one as we're moving closer to the high 210s and into the 220s. I think there is possibility and opportunity there. So that's pretty much it, guys. Those are the main stocks that I'm watching right now. What's going on in the market, some news regarding those stocks, and to just quickly wrap up the main stocks that we talked about, just to give you guys a little, so you can write it down or whatever. We talked about Workhorse today, Tesla, Apple, GDX, GLD, right? Nikola, we talked about Virgin Galactic, Google, Facebook, Starbucks, Beyond Meat, and McDonald's. So write those down. Those are the main stocks that I'm watching right now, heading into these next couple of days in the market. And don't forget, we set a challenge for this video, guys. Come on. 400 likes. Let's try to get 400 likes on this video. Hit that like button for me. Consider subscribing to the channel and join our free Discord chat and Facebook group, link down below in the description box. And do not forget to also claim your one free stock from Webull, valued up to $1,600. All you have to do is deposit $100 into that account and you get your free stock. And I also get a free stock since it is an affiliate link, and I do appreciate you guys, since that free stock I get, well, it really does help me out and support all the free content that I'm putting up here on YouTube. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there. Keep crushing the markets despite all this red out there. And yeah, stay safe as always. Thanks for watching. Peace out, guys.